everybody. Happy Monday and welcome to the Trader Merlin Show. I am Merlin Rothfeld. Happy to have you all with us. Hello, Joseph, Jeff, Big Eb, Tom. Good to have you guys with us. I got a bunch of questions over the weekend regarding prop shops, different asset classes, and I thought, you know what, I'm going to do a show today talking about kind of which way to go. We'll look at prop shops, we'll look at which asset class might be best for people to get started with, and some of the pros and cons to each one. So that is a topic du jour. As far as markets go, nice continuation on up. We had a pretty big rally in the equity markets, and since I'm not doing my normal flow here with a guest, I have no guest today, although I do have guests the rest of the week, so you guys be excited about that one. I'm going to start things off by going over our top 7 like we normally do. Starting at the bottom, looking at crude oil. Right now I've got this on a 5-minute chart, but I'll set it up for a daily. Crude oil has been really friggin' boring. We're still kind of back to that sideways action. Really thought we'd close that gap and head towards 48 bucks, but we had a bit of a sell-off early September and now just traversing sideways. So nothing really noteworthy, even though it was up 0.8% on crude oil. Gold faring a little bit better. You can see this nice green candle we had today after 2 kind of consecutive choppy little spinning top candles. Really was looking for it to drop a little bit further before we get a big bounce, but today was pretty good, up 1.06% for gold. All right, Bitcoin looking even better. We've had a few days over the weekend actually rallying with Bitcoin getting back towards that 11,000 mark. If we can get back above these highs that you guys can see right here, right around 11,200, then I think you'll see that 12,000 mark get achieved in no time. It feels like it's picking up a little bit of momentum now, and more mainstream figures starting to talk about Bitcoin, which is great for the whole space. On that note, we're going to have a show. Oh, I don't have the calendar here in front of me. We are going to have a show on next week. A gentleman I've been following on social media, Matt Leising, wrote a book on Ethereum. So I think many of you would be happy about that. We're going to have him on this program next Thursday, October 8th, talking about Ethereum, what it means, infrastructure, technology, and more info on Ethereum. And Damon, good to have you with us. It's been a while, my friend. Hope you've been doing well. All right, going back to the S&P 500 indexes were the topic of the day. I'm going to do a couple things here. First, we'll take a look at that S&P 500, which clearly had a beautiful bottom right around that 3,200 mark. Is area of consolidation, and then all of a sudden ripped out of it today. Great momentum follow through to the tune of about 1.87%. But we talked about those moving averages a couple weeks ago, and I just wanted you to see right now, we are right at that 50-period moving average. So curious to see whether we'll get some break above that and continuing to move north, because we do have some areas of supply about 50 points in front of us on that S&P 500. But I'm just kind of curious myself as how that 50-period moving average will hold. It may not hold as a supply level, but right now it's just barely above it. That candle has not officially closed yet. All right, NASDAQ, here's your NQ. Good day out there, although a lot of the FANG stocks weren't really that big of movers, even though the index was up pretty significant. 2.31% up for the NQ to 11,394. It also is coming right up into some area of supply, which goes back just about a couple of weeks, right around 11,500. So keep your eye on that one. Best performer on the day, this is Russell 2000. Here's your Russell 2000 up 2.71% to 1507. It's still below that 50-period moving average and coming up into that as well as an area of supply. So all in all, if I look at this chart right now on the Russell, I know a lot of you guys feeling really bullish out there. I'm actually bearish on it for a couple reasons. If you go back to early August, we have been making lower highs and lower lows. We have the 200-period moving average pointing down. We have the 50-period moving average above current price, which is bearish. So I'm actually bearish on this Russell 2000, especially if that 50-period moving average will hold. I hope we didn't loop. There'll be no Brendan looping going on. Did I loop? I better not be looping out there. There'll be no loopas. We got no loopas going on. Okay, trading paths. All right, this was a question that came up, again, from multiple people over the last a week or so. There are a few that came in over the weekend, so I thought let's talk about trading paths. And feel free to interject, everybody. I know some of you have different perspectives or different ways that you've gotten into the markets, how you've gotten started with trading and investing, and it's always nice to hear people's stories. I am very jaded with regards to the industry. I think that most of the industry is full of scams and people who are going to just take your money. And I'm cynical about the entire industry, and I've been since I got started. Let's go to this one. This is from Ivzy, and this is really what spurred the majority of the discussion here. Ivzy says, do you have any advice on what's your thoughts on working for a prop trading firm? Pros and cons, any reputable firm that you would recommend. Okay, so I really kind of break it down into 3 categories here. if you're starting off as trading, there's 3 buckets. Number 1, you've got cash, so you got plenty of money to get invested in whatever asset class you want, and I'll break that down here in just a second. Second one is you've got no cash, and you are looking for leverage instruments. We'll talk about that. The third category is you don't have any money, and you're just looking to get into trading and investing, and you might gravitate towards something called a prop shop. These are proprietary trading firms, and they come in many different shapes and sizes. Now, as you remember when we talked about annuities with Justin Krebs, also in the past with other instructors, they're not a one-size-fits-all type of account. There's huge problems with some of these prop trading firms, and it depends on what the firm is. I'm not going to mention any names today, but it all has different requirements and commissions and fees and structures and payouts. So bottom line is this. Most of these proprietary trading firms, what they do is they have what's quote-unquote called a hiring process, which basically they're going to see if you got any money in the back behind you. You don't necessarily have to bring in money at this point. They're also going to run some tests to see how your trading background has been. If you don't have any trading background history, well, then you have to go through some program and education through them. And of course, that's going to do what? That's going to cost you money to go through their education program. There are also subscription fees to pay for the data. There's going to be all sorts of fees associated with it. Plus, if you go into these prop firms, and let's say you show good performance and they give you a $50,000 account to trade. And with that $50,000 account, let's say, in a year you make $20,000 with it, which for all intents and purposes is phenomenal. It's a 40% rate of return. You did great. Well, you're not going to get to keep that $20,000. You're going to get a small percentage of that. If you're starting out, it's probably going to be more in favor of the prop firm. So they might get a 60% of the gains and you get 40%, which for somebody who doesn't have any money is great. But you made a 40% rate of return in 1 year. You made $20,000 for that account and you only get to keep 40% of it. So you made yourself $8,000 for the year. I wish I could clap with one hand because I'm pretty sure most of you could not survive a year on $8,000. So if you get more profitable, they might give you a bigger account. So let's say you have a $100,000 account and you still make that 40% rate of return, which for them is great. You make that 40% rate of return on $100,000, you got $40,000 for the year, and because you have a bigger account, maybe they'll give you a 50-50 split. Great, you still only made 20 grand. So to me, it's not, prop firms aren't the way to go. And that's just the basic numbers. If you pull out all of the fees associated with it, subscription fees, education fees, seat fees, whatever fees they're going to charge you, and trust me, they're going to charge you as many fees as they possibly can, prop firms don't make a lot of sense for me. Now, in one case they might, because some prop firms set it up where you don't actually lose money. Well, how does that happen? That happens because they have extremely tight money management. And if you listen to the undertones that I'm giving you here, my talk track now is what that prop firm might be saying to you. But I would be saying the exact same thing to you as an educator, as a mentor, as somebody who's trying to help you succeed in trading. The prop firm's going to tell you, look, your money's not at risk. You're going to be trading my account. And in doing so, it will give you a percentage of the gains that you make. Now, what's important is if you're trading my money, I cannot allow you to lose. I can't allow you to lose big anyway. I'm okay if you lose small. And a lot of them actually have a account drawdown, a maximum down of about 2%. So you guys know one bad trade, if you let it go against you and don't have any stop loss or risk management, 2% can happen literally in a snap of fingers, especially trading some of this volatile stuff we talked about. So the challenge here is you go into this prop shop, you make it through the process, you paid all these fees, you're paying for their education, all of a sudden, boom, you get drawdown, you're down 2%, what happens? Bye-bye. Then they just let you go away, and you've lost all this money that you paid in fees and education that you can't use because you're no longer part of their program. So that's one of the tricks that these prop shops will do. Now let's go to prop shop number 2. Prop shop number 2, what they'll say is, hey, listen, you may not have a lot of money. So let's say you have $10,000, but you can't really be a pattern day trader. Make it even smaller if you want. You can say $5,000. You can't be a pattern day trader. And what they'll say is, listen, you come in with your $5,000 and we'll give you $100,000 worth of buy power. But for that, we want a percentage of the profits. We want 50%, which sounds really appealing, right? I get 50% of it. You're going to give me, $95,000 to trade with. It's just simply leverage, guys. That's all it is. The challenge here is your money is 100% at risk and theirs is not. So if you go into a prop shop that offers this type of structure, and I'm making these up as I go along, but a lot of them will have similar structures. If I go into 5,000 and they give me $95,000 worth of, let's call it margin, because that's really what it is. It's borrowing their capital. Now all of a sudden you're thinking, hey, I've got 100 grand to trade with. This is great. If I make 40%, I make my 40 grand. This is awesome, and I get to keep a bunch of it. Most likely a better ratio than you would if you went to a traditional prop shop. What's the challenge here? The challenge is most people that start off do not have discipline, they do not have risk management, and they're going to let one loser erase everything. In that scenario, prop firm number 2 that's going to give you that $95,000 worth of leverage, they have a risk management on the back end. And if your account is down at any point $5,000, what are they going to do? They're going to automatically close out your trade and say goodbye because you've now lost every single penny of your money, not 1 cent of theirs, but their stop loss was your capital that you brought in. So that's the danger of prop shop number 2. Again, there's always fees and structures like that. I personally am not a fan of those types of trading environments. I feel that that's option number 3 at the end of the list. Option number 2, well, let's start at option number 1. Unscammable. You made it. You finally found us. We've been heckling you for months on this show, buddy. I'm just kidding. Good to have you back, my friend. So option number 1 in that scenario is, look, let's say you got $30, $40, $50,000 to trade with. Number 1 for all of these is get an education. And of course, I'm aligned with Online Trading Academy, but if there's other schools out there, fine. Bottom line is you need to have an education and exactly what instrument it is that you want to trade. So let's say, for example, you come in with $50,000. You can be a pattern day trader, right? You could have over $25,000 and you can be a pattern day trader. What you could do is you could put part of that in an equity account. You could have none in an options account, so you can start using options on those. If that's the route you're going, you better damn well educate yourself on how the equity markets work and the options market, right? Get very familiar with these asset classes, because the reason that most people lose is they just don't know what it is that they are trading. Joseph says, I like the mafia. Yeah, you know what? It kind of is. These prop shops, they can be pretty ruthless too. So I personally would just stay away from those prop shops, guys. I don't think that they're that much of a value to you. I think you could do most of it. Patrick says, prop environments, Merlin, you don't like? I love the concept of being on a trading floor. I mean, I'd be hypocritical if I didn't. My start back in the late 90s was on a trading floor, and I loved it. Honestly, it was one of the greatest experiences ever, having been on that trading floor. Now, if I were to redo it, I probably would still go back to the trading floor, but knowing now if I knew now what I know then, it'd be a totally different ballgame. Because the vast majority of people that were on that trading floor were exactly the people I'm complaining about right here. Gunslingers, no money, no risk management, nothing like that, and these guys are taking way too big of chances, and you would see turnover nonstop because somebody would have a great week, make $30,000 for a week, and then on Friday they'd lose $100,000 because they had no risk management, and you never see them again. This is the challenge that we face many, many times on that prop trading or proprietary trading floor. And that was just a floor where we came in and all we were there for was just execution, because this is before fiber optic and fast internet connections, right? We were using dial-up at home. They had a T1 line, and really that's what we were paying for. But they didn't take a percentage of profits. Profits were all yours. It was a kind of different prop shop. So if you go back to the example number 1, which I think is the best scenario to do, is make sure you have enough capital, come in with $30, $40, $50,000, and then study the instrument that you really want to be trading or investing in. The other part of this, for those that, Ivsy and others that want to start off, is start really small. Right? It's about starting small and making progressive footsteps, little small steps, getting better and better and better, and learning every day from it. The key here is to learn as you're building and get better, and make sure on all of these, the number one most important thing for you surviving as a trader, investor, or anything is risk management. You can hold on to things as they drop down, but if you're margined and all of a sudden you're riding something down 30, 40, 50% and you get a margin call, then you're forced out of it anyway, and that just defeats the purpose. So make sure you have discipline and money management in place. Now, the other part of this was going back to scenario number 2, which would be you have no cash, right? You only have a few $1,000s. Challenge here is you're going to gravitate towards individuals or institutions that will require your asset classes that will allow you to trade with very, very little money. For example, Forex. You can open an account in Forex with as little as $100, which is fine. But if you're trading with $100 and you make 100% rate of return, you made $100 for the year. It's really not helping you. So, this coming in with a little bit of money really isn't beneficial to you unless you're thinking long-term picture and going to be growing your capital year over year over year over year. Damien says, rule number 1, always have a stop. Yes. always, and I think it's as soon as, I would say that we could even start before that, Damien. So always have a stop is great, but I think that it should always be a plan, right? It shouldn't be, I bought it here, I'm going to stop out, which is fine. At least you're understanding the risk management side, but there should always be an expectation of what your rate of return is, right? Every trade should have an understanding of why am I buying this? What is the reasons I'm buying it? What could potentially go against me, right? Am I going counter trend trade? For example, today I was trading Lamb Research, totally against the trend, right? I was trading LRCX today, totally against the trend, shorting at supply level as it came into supply from a couple weeks ago and was hitting intraday. I know that risks. I know those risks to me today. I was trading a relatively thinly traded stock, but it was acting really great on that supply level. But I knew it going in. I knew where my stops were. I knew what my risk was at all times. Most beginners do not. Stanislav, rule number 1, don't die. Isn't that always, that's just life's rule number 1, right? We're going to die at some point, so let's just all of a sudden make sure we'll be safe in that process. Okay, Brandon says allocation is more important than a stop loss. Oh, I have to disagree with that. And the only reason I disagree with that is you could be properly allocated, but if all of a sudden that position just goes belly up and tanks straight down. I'll give you an example. If you look at something like, that's one of the reasons biotechs and drug stocks are not on my list, okay? If you look at some drug stocks, they may blow their account, or they may, I'm reading the chat, so words are popping in my head. They may, let's say, miss FDA phase 3 drug approval, and they've been on track, they've been pumped up, everyone thinks they're going to get it, and all of a sudden they miss approval, and they had one drug under their company umbrella, and all of a sudden that thing's down 95%. I would contend that stop losses probably wouldn't help you anyway, but even if you're properly allocated, it wouldn't matter, right? Stop losses are just to help you fight another day. While I agree with you that allocations is critical, it's really important to make sure that you allocate properly so that helps define your risk in all these situations. I would say stop loss is your ultimate circuit breaker that you all need to have on every single trade. Use 1% on biotech and then you only lose max 1%. Great, right? But you're also, but there you go. You have a defined stop loss for the overall basket, which is good. Okay, good, Stanislav, because we don't want to have physical death. Blowing up your account, yes. The movie Limitless is actually pretty good. Okay, first night in trading, pick apart the marks. Yes, leverage with a stop can hurt worse. For example, if it jumps your stop, and that can happen, right? And again, that's when on all of these, I made like a list here of how I wanted to go about these 3 kind of categories of paths in trading. All of them are understanding the asset class. So for example, if you're risk averse, then you certainly don't want to be trading things that are very gappy or have the potential to have huge gaps overnight, which is why, in most of the classes, if you're looking at taking things home overnight, go something diversified, SPY, QQQ, DIA, things like that, even XLF, XLE, just because they're diversified. You could take home Tesla tomorrow and everything looks great, or all of a sudden it gaps down huge or gaps up huge. You just don't know, don't have that control. Okay, let's see. What else did I see here? Merlin, can we come and visit you someday? I'm at the Irvine Online Trading Academy office almost every single day. You're always welcome to visit me there. My home house? Probably not. I'm going to keep my home house as private, but I'm always welcome to see you guys. What stop loss do you normally use on options? Well, it's not on the option per se, right? For options, it's going to be based off of price, where I see the underlying go. So for me, it's breaking above supplier demand zones on the price chart. That's how I'll determine my stop loss for options. Good, Stanislav. I would agree with you. I don't usually take home overnights. Lately, I've been taking home a couple. Just the way things have panned out. So, Ivzy, those are kind of my 3 perspectives on prop firms. I'm not a fan, and I don't know whether they're reputable or not. Years ago, they were all scam artists. Almost every single one of them were scam artists. Nowadays, I don't know. I'm sure there's probably some reputable firms out there, but you have to understand that every single one of these firms is trying to make money. So if I had to choose between the firm that's saying, hey, come in with $10,000 or $5,000 and we'll give you 95 to trade with, so you have 100, I don't trust them as much because I don't think that they really care. They want you to just trade, right? the ones that will come in and actually educate you and you're trading 100% their money and you get to keep a percentage, there's an investment on their part. They're looking for people who can follow, just like the turtles, people who can follow rules, have a plan, stick to rules, stick to the discipline, stick to stop losses, and I think there might be a better interest in your success on their part. Historically, back when I got started in the late 90s, they were almost all high-speed day trading shops getting paid for you guys making lots and lots and lots of transactions, which I was not a fan of. I don't think that anybody should be forced to be a day trader nowadays. No, Eb, I'm still in it. I got my stops just a little bit up. It got close, but didn't hit me today. What was one? Merlin, why am I making so many YouTube videos for Online Trading Academy? Because I still stand behind Online Trading Academy 100%. And I'm doing like the Monday Market Must Knows. I do the Monday Market Must Knows and some promotional videos for them. So there you go. Okay, number 2 question. Oof, gosh. From Karen, she asks, which market do you trade most and why? Look, as far as trade the most, I trade them all about the same. I mean, it's hard to say just based off number of transactions with all the different accounts I have, but I trade equities. I'll trade the futures markets quite a bit. I do trade the options. I'm just not into real complex strategies. I'm a simpleton when it comes to options, as most of you know. Yeah, by the way, I still work for Online Trading Academy. Joseph, I'm back there doing the content for them, so they have me recording a lot of videos. Why don't I like SS? You retracted that one awfully quick, Alpha. Was that just going to see how I'd react to that one? If you just go to the FTC lawsuit that was originally filed, if you read page 19, it says in no specific. I actually should bring the quote up. It says that the man did not trade. He traded very little over a 2-year period, and he lost $20,000. Yet he pats himself on the back as being this oracle. So, I don't know. And plus, I look at the destruction that the gentleman caused for his own interest. That's the main reason I dislike the guy. If you have a problem with someone, you settle that with that person. You don't take down an entire company. Okay, which market do you trade and why? I would say my favorite is probably options, which is the most versatile, but I do trade a lot of equities. I actually still like day trading equities. For example, today I was just out there trading LRCX, just doing day trades on a few hundred shares. Can't trade too much because if you notice, LRCX actually had fairly low liquidity today. That chart was just about to get to that point where I was like, I just don't want to trade it. Real iffy on the 5-minute chart. You can see a lot of odd little gaps, but it was actually working pretty well for me today. So there isn't a specific market that I trade the most. I trade them all depending on what the day or market permits me to trade. Adam's going to have Bob back on. Yeah, actually, you guys know next week, October. So I think it's Thursday. Todd Davis is going to be on doing a webinar with Online Trading Academy on guided practice sessions, which I would encourage you, if you're Online Trading Academy graduates, to check that one out. Next week, I'll be doing one on YouTube. So even if you are not an Online Trading Academy graduate, you'll have access to this one. It's going to be Bob Dunn and Bill Henner, War Stories from the Floor. And basically, Bill Henner, I think he's been trading for 41 years. Bob Dunn's been trading for 39. Both of these guys have 25 years worth of trading experience on Chicago floors, which you guys all know that the mother of trading floors around the world was the Chicago Mercantile Exchange and other exchanges there. So I'll be talking to them about war stories from the floor, and hopefully we don't get in trouble for some of the stories that come out, but that will be next Tuesday, I believe at 4 p.m. So I'll let you guys know more as we get closer to that, but that's the next time those guys will be on. Yeah, it will be a lot of fun, guys. You guys know Bob Dunn's just a wild card, and you never know what he's going to say, and Bill Henner's awesome. I actually saw him at the Online Trading Academy office today. Okay, next question was from Tim. I'm a college student with very little money, but really want to get started trading. How would you go about getting started in my position? Number one, just keep educating yourself. I would learn as much as you could about the market. Obviously, a lot of these classes can be expensive. It depends where you go, and education is expensive. And part of the reason that I would argue that the education is worth it in many cases is the support group and the instructors that are backing you up to help guide you through your journey. If you're just starting out, there's a lot of free information that you can get on YouTube. You just got to be careful there. There's false claims and false promises that are made every single day. It drives me nuts. It's actually the next question here is one of these kind of scam companies that I want to bring up to you guys just so you understand and see what's going on with it. But how would I get started? I would start simply by studying what it is that I wanted to trade. You know, we have great guests on here talking about market relationships and some of the macro pieces of trading. I would certainly watch as many of those videos as you can and learn from everybody's background and stories. We're all different. We all bring something to the table. Yeah, Mary S. who says, is it possible to see the recording of the last fall series with Brock Pierce? If you go to Online Trading Academy's YouTube page, just type in Online Trading Academy and go to their YouTube page, it should be the first video that pops up. That was a fun one with Brock Pierce and Jordan Matthews last week. That was really good. So from there, Tim, with regards to how would you get started, if you don't have enough to fund an equities account, I personally, I know I'm going to get kickback on this one. I'm sure many of you are going to get kickback on this one. I would say start off trading equities, stocks. I know, it's expensive. You don't get margin. That's exactly why I would start there, because the damage potential, I think, is less because you're not using margin yet. I think you go out and you trade, index ETFs, 100 shares at a time if you can, just a little bit to get your feeling for how these markets work, okay? To me, it's critical to understand the movement that happens in these markets. Tim, could you take your, $1,000 and go straight out and jump into the Forex market and get, 50 to 1 leverage in the US, 500 international? Yeah, you probably could, but it's also really, really dangerous. It's dangerous to be playing with that kind of leverage because when you're starting out, you don't know your mistakes. And I know Big Eb, I think you probably back me up. Same with Brendan. Actually, everybody here, I think, would back me up that in the beginning, when you're so green, you don't understand the importance of risk management, and you get so excited in one position that you hold it too long, and all of a sudden you're going, holy crap, that took 30% of my account. What happened? It happens like that. So when you have leverage at 50 to 1, it could be even more dangerous. Now, Richard says here, why not just start out trading in Sim? I agree that's a great way to do it. To me, Sim is more about learning all the ins and outs about your trading platform. So for those of you who are going to start out using Click, you can trade in Simulator on that one. Great. However, at a certain point, what happens is I'm really afraid that people are going to believe what happens in Simulator is going to happen in a real account, right? That's dangerous because simulation, a lot of times they'll fill you random fills. Like it used to be, I could put in any price and the software would automatically fill me. Okay, well, of course that's not the way that it works. I can't put a buy point on Amazon right now for a penny and it executes me. A lot of times simulators in the past used to do that. Now they're operating off the best bid and ask. Merlin's first year one-day loss. You mean my worst one-day loss? My loss in one day is worse than 16. That was my worst, and that was actually in equities. If you go back to 2001, 15,000 in a day was my worst loss on Cisco. That was just brutal. Yeah. Thanks for bringing that one up, buddy. I want to rub salt in my wound, Stanislav. Thanks. I think I told you guys that trade was so bad for me. It was Cisco. Maybe I'll walk you guys through the whole example of that Cisco trade one day, but it was so bad I wrote a song based off of Lodi by Creedence Clearwater Revival. I was like, how did it go? I can't remember the lyrics, but it's like, just about a year ago, I bought me some Cisco, paid nearly $40 and won't see that price no more. I ran out of time and money, it looks like my plan fell through. Oh no, I'm stuck in Cisco again. A long song, but yeah, sorry, I won't bore you with the rest of that song. If I can get a guitar on set, maybe we can do a show. So I see some of you already disagree and say, yeah, equities might be too much capital. I get it. But in the beginning, you don't want to be taking that much risk. We all want to be making 100% a day, which leads me to my next question. Oh, okay. I thought you were talking about me, Stanislav. My worst loss was, back to 2001, or 2011, was it 11? What year is it? Yeah, 2011, when I moved over to Italy. Man, hold on. Got to rewinding here. I moved to Italy in 2001 when 9/11 happened. So it was either 2001 or 2002 when I took that big loss on Cisco. God, it was terrible. Terrible. All right. So let me show you an example of scam. Okay? To me, this is a flat-out scam. Pepe says, have you heard about Trader Cotton Candy by any chance? Okay. And I don't know if it's the same one, Pepe, but if it's the guy that I know who's talking about his basically it's all blockchain, AI, artificial intelligence, charting. The guy is basically saying throw all strategies out. It's just simply binary, black or white. If you watch his promotion video, he says, all you got to do now is go configure these settings, and if you want to make 200, 300% per day, yeah, you just put it right here in the system and you can do that. I've tried to keep my verbiage, my language clean, PG-13. But if you believe that you can buy a piece of software that's supposedly free, by the way, and all free education, of course, but then he goes on to say education classes are more expensive later on, and you believe that you can take a piece of software and just go to a field and type in 200% and that's the rate of return you're going to get per day, you are a friggin' idiot. You don't even deserve to be on this channel right now if you believe that is true. I'll show you why. I made a spreadsheet here so we can outline what that looks like. It's ridiculous what this guy is saying. So I'm going to try to do it so you guys can't see too much. Okay, so let's say you're Tim, I think was the guy with very little money. Let's say you're Tim and you start off. Okay, guys? Day one, you start with $100. That's this square right here. The next day, after day one, you double it. Right? You double it. Because the software says you can make whatever you want. I'm just saying we're going to make 100% rate of return. So you double it every day. Next day, after day two, you're at 400. Okay, by the end of the first trading week, which is 5 days, I've turned my $100 into $3,200. Okay? Now by the end of day 10, 2 weeks, you're at $100,000. Oh, but wait, there's more. Now if you go down to the next 3 weeks in, you've already turned your $100 into $3.2 million. Oh, but that's not enough. I need to go 2 weeks. 1 full month of trading, you're at $100 million. And by the end of a month, 5 weeks of trading, you're at $3 billion. Cotton Candy can shove his software up his backside and stop lying to people. It is ridiculous that these people can make these types of claims because you're going to tell me that this guy has a software that makes whatever percentage rate of return I want per day, 200%. And mind you that I built this calculator off of just doubling. What if I went 200%? Okay, great. I'm going to be turning that $100 into $1 million by 2 weeks in. It's ridiculous that this guy says this stuff and people are like gobbling it up. But this is the problem. There's too much of this BS out there. I mean, do you think that this kid is really sitting on a software that at the end of 27 days would have gotten him up to $762 trillion? Come on, man. It's ridiculous. It's not going to happen. And I don't get how people fall for this stuff every single day in the financial market. So, Pepe, have I heard about Cotton Candy? Yeah, I heard about it. If you subscribe to it, you can't fix stupid. I mean, don't fall for the hype. Put $2 into it and see if it works. Because according to his software, which is free, if you have $2, you should be able to turn that into $1 trillion by the end of the year if you just double it every day. It's just ridiculous out there. I know, Big Ebbets. No, here's the thing. Lock him up, call the FTC on him. Doesn't matter. It's the SEC and FTC won't do anything. He's saying he's giving it away for free. But, you got to pay for his classes. So that's where he's making his money. The key to me in this whole trading thing is obviously we all want to get rich. Nope, I do not argue with the math, Tom. That's exactly why I put it up here. You're telling me I'm going to make 200% per day? I should have had the video here so I could play it, but I'm worried that it might be Facebook or Yahoo. YouTube has a thing where it'll actually freeze my feed if I'm playing anything that is copyrighted. And his thing may be copyrighted. I'll see if I can find it for you guys tomorrow. It's just, as soon as I heard him say, Stanislav, that's a great point. Cotton Candy could solve the national debt. And not only that, but in under a month. If we started with $100,000, let's just put $100,000 in here. Just for fun. Oh, I love it. I'm going to put $100K in here. Because, that's reasonable. By the end, so we've got, $21 trillion worth of debt. So we would, at the end of 3 weeks, basically not even 4 weeks, we could pay off all of our national debt. There you go. Oh, I'm sorry, that's billion. Hold on. 1,000, million. No, that's trillion. So 18 trading days, you'd have $38 billion. Why aren't they going after it? They're not going after him because it's not trading advice. And this is something that I found at the Traders Expo years ago where people were making false claims. And it was really, I asked the same question. I said, why isn't the FTC, or why can't they stop this? They go, they're just selling a software. And I said, yeah, but they're making claims that are just so unbelievably ridiculous that nobody on earth should believe this at all. But unfortunately, people do buy it. If they were actually saying that, I'm not exactly sure how the FTC or SEC would get on top of that guy, but proof's in the pudding. By the way, if any of you guys can prove me wrong, I really hope that you can use this software and make $1 trillion in a week. I'd love to just maybe give you a couple $100,000. That'd be fine. Yeah. Sure. I'll look at the Aussie dollar for 1 sec. So, yeah, it was cottoncandy.ai. I'll give you guys more info on it, but please don't subscribe to this guy. He's got all these classes, and it's funny because he's like, it's all free education. Then it's, we charge you for education. I don't know. It just reeks of scam all over it to me, especially when anybody says if anybody says all you do is plug in the amount you want to make per day and let it do its thing, it's a scam, right? Even Goldman Sachs is not going to, even if they did own this software, there's no way Goldman's going to allow this to leak out to the public. This would be the goose that lays the golden egg. I mean, come on. And I don't even think I would be greedy, right? If I was in this situation, all I'd want is, if you can give me 1% a day, you're beyond rich. Beyond rich. Maximum loss, 100%. Maximum reward, infinite. Yeah, there you go. So anyway, you got me on a soapbox here. I was going to get started on that one. All right, let me go to, do I have any other listener questions here? I don't think that I did. Real quickly, I'll bring it up, see if I have any more. Okay, it's cool. So we'll go to the chart here. I see you guys were asking about AUD/USD, so I'll bring up that one. As you guys probably saw today, the dollar index had a little bit of hesitation there. That's one I've been keeping an eye on. I'm in the bullish camp. Some of the other guests have been actually bearish on the dollar. I'm in that bullish camp. All right, let me disconnect these moving averages, and you wanted AUD. The move that happened today, right? Obviously, if you look at it, it's not the best type of demand zone. I'd want to split this up into a smaller time frame, so I'll go a 4-hour chart. And then I have to add some time here because my chart will obviously not let me see all of that. I don't think it will. Yeah, it only goes back 20 days. So I will go back even further than that to show all the goods. Let's go back 90 days. All right, so we'll make that full screen. Zip back here a little bit. And, realistically, I'm actually looking lower on this one, on this AUD. If you're looking for a 4-hour, right? There's your buy point there, which would end up being that area that what was supply now becomes support, right? So to me, that's your next stop is going to be at 0.7025. There's also stuff that's going to be slightly lower, which would probably be safer, getting just south of that 70 handle. But we talked about David talking about the quarter theory. Those are the numbers I'd be looking at on that Aussie dollar, right? You kind of came right into that one today. All in all, not too shabby. Yeah, you're actually right in that area of demand between that 70, 69.9 and 70.25. So, yeah, you came right into it. Like it. Real good. Yes, I agree with whoever said have gotten. Oh, boy. I can't, guys. I would probably get shut down by the FCC communications for my verbiage. I would be tearing into this guy and absolutely not let up. For tomorrow, I'm going to play just that little clip of his video, guys, where he says, you just plug in whatever you want. You want to make 200% a day, 300% a day? Oh, you can do that real easy. It's like, oh, God. Yeah, of course, Unscamble says the Fed would be so mad if we paid off the national debt. Of course. That's our bargaining chip to manipulate interest rates to ad nauseum, infinity and beyond. Yeah, they don't want to see that debt go away. It sounds like they do, but no. That's a bargaining chip for them. All right. Let me real quickly go to your economic calendar. There's really not much on the earnings front for tomorrow, guys, so it's all about the economic calendar. Today really wasn't that big of a day for U.S. Not a lot of stuff to talk about. There is huge stuff happening tomorrow. I mean, I don't want to say huge. I just mean huge with regards to the quantity of announcements happening tomorrow. I had to make 2 columns here because there's so much stuff. Almost the entire left side of this is U.S. and a lot of it's Fed members speaking. You notice the times, it's throughout the day. You got Quarles, Williams, Clarida all speaking tomorrow, as well as Harker and Williams. I mean, multiple speeches all day. Certainly they're not as important as Powell speaking, but it's still important, right? Anything they could say could cast doubt or optimism on these markets. You also have the Case-Shiller Composite 20 Home Price Index coming out for the U.S. tomorrow. Wholesale inventories and goods trade balance. That's really it for the U.S. You got some GDP numbers coming out for the U.K. tomorrow, which are not looking so good, right? They're expecting a negative 20.4% contraction. This is something that's of interest to us in the U.S. as well. We have GDP numbers coming out, which could show some pretty negative moves in the market. Right now, the preliminary GDP number for the U.S. for the previous quarter was negative 5%. Right now, the expectation is 31.2%, which 2 consecutive quarters of negative GDP, that's what a lot of people say is the definition of a recession. But I think we need more data than just that. But that's bottom line with regards to your economic announcement for tomorrow. Hook reversal is Bob Dunn's strategy. Yeah, I don't know what you mean by specifically a hook reversal. If you look at that price chart, I think you're probably referencing this AUD USD with something that looks similar. It's just, bottom line for me is when you have something that sells off aggressively, like you can see with this Aussie dollar, and I'll make it a 4-hour time frame just because I think it looks better on the 4-hour time frame. You see that aggressive sell-off, then you have some semblance of basing, and then all of a sudden you're just waiting for it to break back to the upside. To me, that is what I'm looking for, right? That would be the hook reversal. Would also be the same thing we saw with the U.S. dollar. I mean, this is almost identical chart. You've got aggressive sell-off, you have basing sideways action, and then all of a sudden you're basically saying, I don't care what it does. I'll even draw this. Let's do it this way, because this is how I love these types of patterns. You'd go in here and you'd say, all right, that yellow box, I'm not doing squat until it stays in there, or it breaks out of there. If it stays inside that yellow box, who cares? So right now, you could be shorting the AUD USD on the 4-hour based off it coming into this area of just top-level supply that it's been in for the past few days, or you could be waiting for it to break out and then buy that breakout move. That's, to me, would be the hook reversal where you're kind of waiting for that thing to turn and head back to the upside. Okay. All right, so you guys talking about Bob Dunn? Oh, thanks, Kevin. The Money Market Must Knows is something kind of fun I've been putting together for OTA for the past couple of months. It's actually been rather fun. I think you guys are talking about Bob Dunn. He's an interesting guy. Eventually, you have to, Mark Stinton says, eventually you have to choose a trading style that resonates with you and focus on it. Too many styles will confuse you. Mark, I could not agree with you more. When I first started, just because we're on that kind of topic, we'll finish up with this one. When I first started, I worked for a financial planning firm, and there was a kid there that did long-term investing. And I was like, oh, this is what it's all about. So I was trying to do his long-term investing stuff. And in hindsight, I wish I would have followed this guy more because he was very, very intelligent. I didn't know at the time. I thought he was smart, but nowhere near as good as in hindsight I figured him out to be. But it made me focus on the longer term. Remember, I have a finance degree, so I was told to buy and hold, look at fundamentals, etc., which is also going to be another great topic, guys. I know we're talking fundamentals. I've pointed you guys to the Investors channel before. It's a YouTube channel. Colin Teddards is the guy who puts all that stuff together. He's actually be a guest on our show on this Wednesday. Really excited about that. So it'll be all kind of a fundamental breakdown show. Don't really know which way we're going to go with it, but the guy's got just a tremendous amount of information from the Investors channel. That'll be on Wednesday. But that's what I was taught. I was taught fundamentals. And like Mark says, you have to find out one that resonates with you. If you've noticed my personality on this show, I don't have much patience. I don't like to sit and wait around for things to happen. I have to keep going and move and fast speed. So for me, I prefer short. When I saw day trading back in the late 90s, I was like, this is amazing. This is what I want to do. Get in, get out, be done with it, live my life, and who cares what happens in the markets. That's what I got into. And it was this huge swing from the longest term you could do investing to shortest term trading you could do. And I kind of had to find out where was my happy medium in there. I still prefer the shorter term. But it's what resonated with me. It's what made me fit my personality. If your personality type is you're really slow, and you're kind of mellow, and you like to take things slow, and maybe think a little bit more about the planning process, and really, take your time. Day trading's not for you. You don't even want to look at a 5-minute chart. Your hourly is probably the smallest time frame you'd ever think about going because you're going to be more relaxed and thinking bigger moves. If you're fast-paced and someone is always just feel like you're, always skitsy and caffeinated and just bouncing off the walls, short-term trading might be the way to go. But again, each of these styles has risk, which maybe we can talk about at another point. Stanislav says, Merlin, for Tim, what about trading micros? That's a great point there, Stanislav. So Tim was asking, where do you get started with a little bit of money? I'm a huge fan of the futures market, and right now the micros, they are a great opportunity. I like equities now because there's no commission costs almost anywhere. So, my cheapness says, why bother paying a commission if you don't have to? I would definitely shy away from companies like Robinhood. Just get a platform that actually looks like a real trading platform and has some of the tools. So when you finally get up there with the big boys and use a real trading platform, you'll have the right stuff in front of you. As far as those micros, there's not a lot of different products right now. As I mentioned, I would recommend trading the indexes, the ETFs, if you're starting out in the equity markets, just because it's diversified and you don't have to worry about the gaps. But those futures products can be great for you, and they're starting to expand the lineup of those micros, which could be very beneficial. So good for them. And Brendan, and this is why I love it, right? I'm not trying to make you a short-term trader. You had to find out what worked for you. Brendan says, Merlin, I'm the opposite. I suck at short-term, envy skilled day traders, but I'm smashing long-term. And bottom line is, if you're smashing it long-term, you're just kicking butt, I would tell you, don't even think about short-term day trading anymore. Just do whatever's making you money, man. That's it, bottom line. So good, I'm glad you're killing it. Let's see, only $1 round trip on most platforms for futures. True, that's true. And it's not much. But, look at me. I'm complaining about $1 in, $1 out when I could get it for free somewhere else without the leverage. So, apples to oranges. We have to find out what actually fits our trading style. But it was a good point that was brought up there from Mark about that. They have to fit your trading style. All right, guys, tomorrow I'm going to have Jeff Manson on the program. You guys know Jeff is always out there looking at different perspectives of these markets. Some of you love the way he analyzes. Some of you might not like it. I don't really particularly care. Hopefully give him the benefit of the doubt and let him see what he sees out there in the markets. We'll probably sprinkle some Fibonacci stuff on there as well. Jeff's just got a ton of trading experience, and he's always doing things for different sites. So we're going to have Jeff Manson on the program tomorrow. If you have questions, feel free to send those in at TraderMerlin.com or put them down below the video here. Of course, if you like today's show, give me a thumbs up. One last question. Adam says, would you say the turtle traders are all swingers? Well, I don't know about their sexual orientation and their personal lives, but as far as being swing traders, yes, absolutely. I think they are all swing traders. It's about the trend is your friend, right? And let me give an example. It's not that they can't be day traders, because for a specific trade by the turtles, if there was a stop loss, which may be far away from price, and it hit that, they're going to get out. And they'll be able to rebuy back in. But the point is, with turtles, it was a trend-based trading system, right? They're just buying into that trend, trying to stay on top of that trend. That was the goal. So that, to me, is the bigger time frame traders. They're going to be swing traders, days to weeks. You'll hear that with something we talk about with Bob Dunn. One of the things that we have to be careful with Bob Dunn and Bill Henry on the program is these guys knew almost every Chicago trader. So I'm like, guys, let's not name drop, because when we were talking about the show and coming up with ideas for it, man, they're just dropping name after name after name after name. And I mean, some of these stories, I'm like, okay, we can't say that one on the air. Maybe we can have a private screening of some of the R-rated stuff, but always good times having those guys in the program. That'll be October 2nd. So tomorrow's Jeff Manson. Again, guys, if you have any comments, questions, feel free to give me some feedback. I appreciate it. I loved all the participation today. Welcome, Unscamble. Good to see you. Also, Stanislav, been a while. So hopefully you guys have a fantastic trade today. I will see you mañana with El Jefe Jeff Manson. Take care, everybody.